good afternoon, and happy Monday. No, your eyes are not deceiving you. This is not Kristen. This is our friend Eric Remy with Landmark Mortgage Planners. I am Rebecca Johnson, and this is Eric. Say hello to everyone.
Hey, guys.
And we will be your podcast people for the day. We did bring Flat Kristen along. If you're familiar with Flat Kristen, you can have her here with us today. So I hope she's watching. I'm not sure where she is. She's off in St. Augustine with Mason somewhere, but we hope she's having a good day. So we will start this Monday off like we do every other Monday with the Monday Market Moment. All right, here's what's happening, and let's start with, which one do you want to start with?
Let's start with Tampa.
Let's start with the Tampa market. All right, so Tampa for the month of July so far has had 582 active homes or residential family style homes for sale. They have had 486 pending and, there's something on there. Okay, 464 closed properties that have closed in the month of July. So steady. We're still seeing the same. We're seeing a little more active inventory down there than we are for pending and closed, which is a change in the last couple months, but still strong numbers. Everybody's getting some business, it looks like. We will go up to Ocala and Marion County. 505 active so far for the month of July, which we are on the 18th day, so not too bad. 443 pending so far for the month of July and 325 closed. It looks like they have more pending than closed, but more active than pending. So I do think we're starting to see some inventory supply changes on that front, which is good news for buyers, which is going to lead into some conversation we're going to have in a little bit. We will go over to Gainesville next. Gainesville, they have 115 active residential properties so far for the month of July, with 151 pending and 139 closed. That seems low. I know we're going to be doing some year-over-year numbers, but that is the first one we've had where the active is less than the pending. So I definitely think we still have a supply shortage in our area over here. And then St. Augustine, remember, St. Augustine's kind of a special market. We're only looking at the little strip called the Beaches, kind of on that Anastasia Island area. And remember, the active is since the beginning of the year because they're in a different MLS, but they have 120 active single-family properties, so condos, townhouses, single-family homes. 21 pended so far for the month of July and 19 closed for the month of July. So still strong numbers. People are definitely out there buying. We're going to get a market update and some interest rate information from Eric. But otherwise, the activity is still looking strong. It's still a good time to buy. So, all right. So we'll jump right into the interest rate because I think that's what most people want to know is what's happening in the lending world with interest rates and loan programs.
Yeah, so interest rates have gone up, obviously, over the past 6 months or so. A lot of factors in that. I want to say we're probably up about 3 to 4%. So in other words, if we're at 2.5, 5.5, 3.5, 6.5, a lot of that has to do with just market conditions, inflation. I know that's a big topic. Everybody kind of feels that.
Yeah, everybody's definitely worried about inflation. I've seen a lot of lenders post that you should marry the house, not the rate.
Correct.
What does that mean to you or as lenders? Like, what are you trying to articulate to the public?
Yeah, so obviously waiting to buy if prices go up and interest rates go up, that puts you in a worse position than buying now. Rates are temporary, so typically they'll go up, they'll go down. There's different cycles. So you're not marrying the rate forever. It's a 30-year fixed or 15-year fixed. However, if in a year, 2 years, 3 years, they come down, you have the opportunity to refinance.
And what's nice about having a great local lender like Landmark is y'all are all here. So if people are following after they purchased on their home and they have questions like, should I refinance? Is now the right time? You guys actually, reach out to your base pretty regularly to tell them when it's time to refi if it gets below a certain point. But you also are available for contacting and asking questions.
Yeah, we like to keep in touch with our clients after closing. Database management, that kind of stuff. An annual mortgage review. We send those emails out. We have some cool technology where we put our past clients into a system with artificial intelligence. They can sign up and it gives them updates on their value, that kind of stuff. Check in market rates. They can send us messages through there. Hey, how much equity do I have? Should I tap into it? Should we refinance? Those kind of things. So pretty cool stuff we use on the back end.
Great. Yeah. And so we're not expecting to see prices drop drastically. They might come down some, but we're not expecting it to be so bad that it should stop people from buying if they come down at all. A lot of areas aren't seeing that yet. But the rates have gone up. Now, are you guys expecting them to come down as we get closer towards the end of the year? I know it's a midterm election, so all of that kind of stuff sort of plays into it.
Yeah, it's hard to say. There's different projections. Some people think it might come down some. Some people say it might go up a little bit more. The Federal Reserve plays a big role in that. I know everybody says, oh, they're going to raise rates. That's more tied into short-term lending, which would affect home equity lines, things like that. The market jumped very quickly because inflation seemed to be getting out of control. And so the Federal Reserve, by raising their rates, are trying to slow down lending on businesses and things like that to slow growth. If they do it too fast or too much, it could put us into a recession. And recession, typically, in that environment, historically, after a recession, rates do come down about 1 to 1.5% from historical data. So you'll see the 5-year and the 2-year Treasury bonds are actually priced higher than the 10-year Treasury bond. So this is called an inverted yield curve, and that's a typical indicator for a recession. So we may be in one, we may be heading into one, but you can get better return on a 2-year bond than a 10-year. So that is something where the market is feeling that in years to come, rates may come down some. So.
Okay. Well, so basically, you get in there and you go ahead and get your rate now. What are current rates typically for an average consumer that's getting a conventional loan?
Yeah, there's a lot of parameters that go into that.
I know. I'm not trying to stick you to it. What's a range of what people are seeing right now?
I would say between 5.5% and 6.5%.
Okay.
So.
Okay.
Yeah.
So.
And there's points. I mean, you could get lower rates by buying points. A lot of people don't quite grasp that. It's called a discount point, and it's not a discount. You're paying up front to discount the interest rate. Yeah.
Right.
So.
And you guys run all the math to show people how long it takes them to recoup that and if it's worth it. So I will say rates are getting back to where they were when I started in 2006. When I started in 2006, they were in the 6s and up to 7%. Yeah. Was not outlandish, and people were actually thankful for those rates.
Yeah.
So they were excited to get them. So I do think part of it is just a re-education of expectation on the consumer's part. It's kind of like when every other house was a foreclosure or a short sale, and people got used to buying them at, the big joke is $30,000 off, and they got the patio furniture, and they got, a credit for the roof, and they got all these things back, almost like credits or
incentives.
Yes. And then it went to, list price is start price, for offers. So I think the interest rates, it's like all things in real estate. It's cyclical. It comes back. If you do have any questions, please drop them in the comments below for Eric, or if you have any questions for me. But definitely Eric is here to answer any of your lender questions. We know we have some realtors and people who are watching the show that are in the industry, and we welcome all of you. Okay. Are you guys feeling the insurance stuff? Because I know insurance is affecting everybody, and you have to have insurance to get your loan. So are you guys starting to work, tell buyers and realtors, hey, start working on your insurance immediately? What are you guys feeling any of that, or are you lucky? Okay.
No, yeah, absolutely, yeah. We're telling people as soon as we take applications, start getting quotes. And every quote now needs a 4-point inspection. Right? Okay. So just about, and maybe a brand new house doesn't, but if it's on a resale.
They probably need to.
I don't know. So yeah, we're telling them up front, please, because that will delay things. And as we get into storm season, you know how that goes. The storm comes along. I know.
They might hear you.
And that could throw off the whole process. And if you wait too late, and if you can't get insurance or the premium's too high, it could affect your debt to income ratio.
Are you seeing a lot of that where the premium is just too high?
I haven't seen that
insurance yet.
Okay. We've had a couple where people were like, "Oh boy, it's kind of sticker shock on it."
It's definitely way more expensive than it used to be, without a doubt. Like even at Rabell, like our building insurance and our car insurance, everything is way higher than it was a couple of years ago.
Yeah, we used to be able to estimate $1,000 a year for an annual premium. I usually start out at about $1,500 to $2,000 now, just as an estimate. And if it comes in lower, obviously we're in good shape. So.
We have a question from Kristen. So, hey, Kristen, why is an FHA a better option over a conventional loan for some buyers? And are you seeing FHA finally closing?
Yeah, so we've had FHAs closing. The hardest part was getting, offers accepted with FHA. There's a stigma out there, I think. And again, when we started back in 2005, 2006, there used to be a VC sheet, and that was the condition of the property, and there was all these boxes that had to be checked, right? So
we were cutting bars off of windows. We didn't have to. Thankfully, we got somebody that was able to help us, but Kristen and I were thoroughly prepared. I'll never forget that. That was in Springtree. I'm sure you remember, Rabell. Like,
I think we all got stories of like,
oh my God, Tina Yakel was in the other side of it, and she was trying to get, she was like, I'll get them off there. Don't you worry. Yeah. So there you go. 1,500 to 2,000 is a good.
Perfect. Thanks, Gary.
But yeah, so I think
so if you sold houses before in the past, I think there's just this whole thought process of that they're going to ding me on condition, but really the appraisals are pretty similar to conventional. There's not a big difference there. So the loan process itself, same process.
It takes a little bit longer, doesn't it? But not much. Not
really.
Enough to really. Okay.
Yeah.
It depends if you have an excellent loan partner who's working on it.
Yeah, I mean we can still push FHA loans through 30 days, no problem.
Okay, there you go. This one's definitely for you.
Okay.
What should buyers focus on? Pay down loan, fixed credit, or hold on to extra funds to pay rates? That's an excellent question, and it does come up often.
Yeah.
And I'm going to guess Eric's going to say there's a lot of variables, and it depends on the loan. But no, I'm going to make you say
everybody's different, right? Each scenario. So for some people, it might be fixing credit. For other people, it might be paying down the rate. If they're going to be the long term. When you're looking at paying down rates, if you're going to refinance in 2 years, it may not be worth it because you're paying extra and you've got a time frame to recoup that money. So those are just conversations we have to talk about as well. Instead of going, okay, 6% or 5.5% and pay a point or 1.5, are you planning on refinancing if you can? So.
Do lenders prefer FHA?
Maybe some. It doesn't matter to me personally.
You're like, I just want people to buy a house.
Well, yeah. So FHA. There's thresholds where FHA works better for some clients, usually tied into credit scores, if they have more down payment or not. So there's just different variables for that.
Yeah, so. I always find it interesting, and I recently ran into this where a seller was unhappy because a buyer was only they were all conventional loans, but they were only putting 5% down, and it's because they wanted the extra money to do things after closing, sure. Updates to the property, repairs, whatever. And she did not feel they were as qualified as somebody who was putting 20% down. And I think that's really sad that people feel that way about FHA. Yeah. I will say I have some scarring stories where we've had to do a lot of different stuff through the years because of an FHA loan, like cutting bars off of windows, replacing screens. There have been deals that I was like, oh my gosh, we'll never get this closed. I mean, shoot, I had just had a VA deal and I was out pulling bags of weeds and blowing the driveway off because I was so desperate for the thing to close and get out of my hair, but we got it done. But the entire house was wood rot. So if you have a home that's in decent shape, you do have a good chance. Now, do you have to have I get a lot of people who ask me this, and I know we have to go to break here in a minute. On FHA, do you have to have a clean WDO?
We don't require it. It's
Landmark doesn't require it. Sky Maze, are you listening? It's
not an FHA requirement. I will say if the appraiser comes back and says, "Hey, there's wood rot or there's an issue," we recommend a termite inspection. There you go. VA is the only true product that requires
it. Okay. Ooh, I've got USDA questions too. Do you deal with USDA?
Oh, yeah.
I haven't done a USDA in years, but we have to take a quick break and then we'll be right back. So get more questions ready for Eric, and he's going to tell us a little bit about Landmark when we get back. Looking for your next shopping trip to Gainesville? We have a few places to recommend. Starting with Butler Plaza. This shopping center has been a hub for shopping in North Central Florida for over 35 years. You can find everything you need for your busy life, all conveniently located in one place. Next, we have Celebration Point. From From relaxing outside in the beautiful promenade to shopping for the perfect outfit, the number of things to do at Celebration Point is nearly unlimited. If you find yourself on the west side of town, Tioga Town Center is a must visit. With premier shopping and dining, there's lots to experience. Tioga Town Center has regular events such as Movies on the Square and Summer Concert Series that invites families and guests of all ages to enjoy local outdoor entertainment at the beautiful covered amphitheater. Lastly, Hale Village Center has a vibrant shopping environment where you can experience great food, local shopping, and one of the best farmers markets in town. Hale Village hosts two very popular festivals every year, Oktoberfest and Light the Village. Please visit buysellrebell.com to learn more about local shopping centers in Gainesville. All right, welcome back. I'm Rebecca Johnson. This is Kristen Rabell, and this is Eric Remy with Landmark Mortgage Planners. So we've been asking Eric some questions. I do want to ask him, why Landmark? Like, what sets you guys apart? What makes you guys so special? We do have realtors and buyers in the audience, and so I think it's important for them to know what makes Landmark Mortgage Planners special and unique, and, you know, all that.
So, yeah, we take a little bit of a different approach and look at each individual situation from a monetary standpoint and say, what's best for you? Okay. So that's where the planners part comes from. And from the management up, we really try to just help people make the best choice for them. Maybe putting down $200,000 isn't the smartest decision. Maybe it is. Maybe FHA is better. Maybe it's not. And so helping people think of longer term, and that's where the planners part comes from. Also, management is really easy and accessible, and we're all like-minded. Want to get things done. We meet quite often and go over every single loan and make sure it's on track.
Yeah, we sprung you from your meeting that you have
on
Mondays.
We have a Monday meeting.
Thank you for letting him miss. We appreciate it. Let's see. Oh, there's a quick question from Susan. What question should a buyer ask when shopping for a lender? That's a good one.
They probably ask you guys more questions, but
I always tell them to ask the lender.
Yeah. So I think for buyers, it's, you know, as a lender, and when you're new in the business, you're like, you hate losing a deal. Oh my God, I lost a deal.
That's a sickness that realtors have also.
And it happens on your side too. But the reality is, you know, we're not going to get every single person that calls us. We're not going to close that deal. Maybe they like somebody better. Maybe just had an off day. Maybe I was busy doing a podcast, didn't pick up the phone, and they called somebody else.
Well,
that
this is
happened
better. This is better.
Yeah, this is way better.
No, I always think it's about connection. Like, do you connect with this person? Do you guys have a product that works for them, and, you know, a comfortability? I think people forget to do that when they're buying a home. Like, you need to trust and feel comfortable with the people that you're working with, because if you don't, I mean, buying a home can be a scary experience. Yep. I mean, I'm in the industry, and anytime I look at buying, I'm always looking at my monthly payment going, wow, I can afford that, but it still feels like nerve-wracking to put that on yourself.
Still a burden, right? It's like, oh my gosh. Yeah, and so much of the process has tried to go automated, and it takes away that personal feel. So that's another thing I like about Landmark. We try to talk to people, meet with them face-to-face, and that kind of stuff. So
I like that too as a realtor, because then a lot of people have a lot of questions, and so many places are automated. They're just, you know, send the documents, click here, sign here. You don't really understand what you're reading, but I feel like they're nervous and afraid to ask questions. So are you guys meeting with people in the office if they do have questions and doing loan applications that way?
Yeah, we don't have a problem with that. And then even over the phone, just being able to talk to somebody, take an application, you just establish that relationship with them up front. Yeah. Kind of get to know them a little bit, and they get to know you. So
I like that. Yeah. Very good. Okay, so we were going to talk about FHA and VA mortgages, which I know we already kind of got into that conversation. I got excited. Kristen asked that question. So I wanted to take a minute and talk about those versus conventional. What are like the top 3 differences between those loans and somebody that's conventional that a realtor could explain to their seller that says, hey, even though they're FHA or VA, we should still give them the same shot, because these are the differences, or this is what to expect.
Yeah, so we'll start with VA. I love doing VA loans. I do quite a bit of them. And you're helping someone that's served the country.
100%. I'm glad that's the first thing you
And
mentioned.
100% is the second thing.
Oh,
it's
that's
100%
true.
financing.
There you go.
So now they can put money down. It doesn't mean they don't have money. A lot of the veterans do have money.
Most of them have plenty of money.
Yeah, and some of them may put 5% down because it saves money on the funding fee. And some of them may have a service-connected disability where they don't pay that funding fee.
Yeah, I've had a couple of those.
Yeah, and so it's a great loan product, and I just think there's a misconception. The WDO is required, and I would say...
But now the seller doesn't have to pay for that. The buyer can pay for that.
The buyer can pay for it, yeah.
You just have to cross it out on the addendum. Yes. Yeah. The addendums don't read that way. You have to make that change. But if you're, to me, I'm like...
It's $100.
It's $125 typically. Yeah. I don't know. Yeah. Can you ever really do enough for your service people?
Yeah, so there's no PMI. So FHA and conventional both have mortgage insurance, which is built into that monthly payment. So from my perspective, VA, if you're eligible for it, is probably the best way to go.
So one thing I like about VA is if you're in a tough market and you're running into an appraisal issue, you get to do Tidewater. And I know not every Tidewater is successful, but it at least gives me the heads up as the listing agent to go in and defend my pricing and do that. Unfortunately, with some of the other loan programs, if you don't appraise, they've already sent it to the buyer, and you're not going to change everybody's mind.
Right.
So,
Tidewater is a great thing. And the other thing with VA, there's no conforming limit. So you can do 100%. It doesn't cap at the 647 loan amount. So you can do a jumbo, 100% jumbo if needed. So.
Why would somebody do FHA versus conventional? Because you have all the way down to a 5%. So say they have 10% in the bank, but they still chose an FHA over VA. What are the differences on that?
Maybe just looking for VA or conventional?
FHA versus conventional.
Okay. FHA versus conventional. So sometimes the interest rates are tiered based on the credit score.
Okay.
So a lot of times it's more of a credit score thing, and that threshold is usually around a 700 score where we start looking. Maybe even 720 at FHA being more competitive as far as interest rate and mortgage insurance.
Okay.
But those are two things we'll look at when we're in that price point. And then also the down payment, 3.5%. Conventional does have a 3% option, but there are some first-time homebuyer requirements or income restrictions on those as well.
Yeah. So. I feel like everybody needs to, and I know Kristen's on the same mission as I am, is to change everybody's mind about VA mortgages. Mm-hmm. And I really don't even think you can lump them in with FHA. Right. I know they're often, and I just put them on there. Otherwise, we would have had like this huge title. But to me, you can't even compare them because VA is a very specific product for somebody who has served the country. And to me, it's almost an honor to get to work with them. And that's, when I talk to my sellers, that's what we discuss is, we actually had one, it was a little bit more, but they were like, no, I want to go with the person that served the country. They deserve to get a home. And I thought that was amazing because not everybody is that way. Even though we did discuss, you have to have a clean WDO, you have to, there are a couple of things that you're going to have. And they were fine with that. Until we discovered termites. No, we did discover termites, but it was all good. They did the right thing and took care of everything. But yeah, so to me, FHA and 3% conventional, those are almost the same. In terms of strength.
Yeah.
But unfortunately, I feel like FHA gets a bad rap unnecessarily. But whatever.
Yeah, it does. And again, the only thing I could think of is if you've been around a long time in the past, maybe gotten burnt on a deal or something like that. So.
We agents, we have long memories. Yeah. I do want to get to the next topic in one second, but I want to ask you about USDA. Are you starting to see USDA come back as we're starting to get a little more? Because I haven't done a USDA in years, but I know they must be coming back because I've been getting calls of people who are looking for those types of programs. So are you starting to see that come back?
Yeah, I don't think they disappeared. They may have slowed down a tad bit, but depending on the market and where you're at, obviously that's for Alachua, High Springs, outside of Ocala and those areas, Melrose.
So I'll have to look it up, but they had parts of Turkey Creek, and then they had parts of Longleaf that were on there.
Yeah, so actually south of Archer Road, all of that's qualified. So it just depends on where you're at. It doesn't qualify everywhere. But I think as prices have gone up and people have moved out, that's starting to become more popular again. And they raised the income limits on that as well.
Oh, wow. So that's an interesting loan. We did tons of them in the depression or the recession or whatever you want to call it. It felt like a depression at the time. But we did tons of those. I mean, like I was like the queen of them. I felt like all I did was USDA loans. But okay, so that's kind of making a comeback. We'll probably see that as inventory goes up. Yep. So reverse mortgages, you had sent me this. Yeah. And I want to know what you're thinking about. Whoops, the screen is shrunk. We do know how to spell mortgage, we promise.
Oh, yeah. Yeah, so reverse mortgages, in 2008, they created a reverse mortgage for purchases. And we see a lot of people moving to Florida or that live in Florida that have retired or retiring. And if you're of a certain age, if it's 62 or older, we're starting to see people that are putting all their cash into properties and maybe they're having to settle for something less. So reverse for purchase is just a generic example. If you got a $400,000 house and they've got $400,000 cash, they're depleting all their savings.
Right.
And they're going into the year, so they're going to need it the most. So you could maybe do 50% down. And there's a calculation, but 50% down and do a reverse mortgage. You don't have to make a payment. That doesn't mean you can't. So you can pay the mortgage payment for as long as you want to, as long as you have income coming in. And by doing that, you actually pay down the balance and start a line of credit that continues to grow at your interest rate. And so that line of credit over time can be a great tool for somebody in their later years if they need medical expenses or anything really, and it's tax free.
And that gets into that planner side of what y'all do.
That gets into the planning, right? And so now you've got $200,000 left over. You can invest that into something else. Let that grow until you need it, and then you've got the mortgage where you're not required to make a payment, but as long as you can do that as well.
How long does a product like that take to close? Is it still the same closing time?
It's similar. I would say probably 45 days. It's a little bit longer.
Okay, a little bit longer on that. Now, when they go to sell it, do they have like a loan to pay back or like a debt to call in, so to speak?
It depends on how they use it, but if they took out the $200,000 in that scenario, didn't make any mortgage payments, the interest would accrue, and they'd have to pay off the balance, whatever that may be.
Yeah, I've only ever had one of those come up, I think, in the last 17 years, and we had to basically get what the payout would be to make sure she sold it high enough to cover it. But
now the payoff.
But she did a full reverse mortgage. She did 100% of what she had in it. So
and it's another thing. It's federally guaranteed, and they'll settle at 90% of the value.
Oh, really?
So if the market shifted and their balance went up and it went down, if something happened, they passed away, whatever the case is, the heirs could sell it and wouldn't be upside down on it. So
it's got a lot of cool stuff. Product it's because the boomer population or generation is, I think, what is it? They're the largest or maybe one of the largest, and they're all starting to get to that age where they might be looking for some options.
And like I said, it's a great planning tool. It's not, you don't want to do it as last resort, but if you know about it in advance, it's something to definitely look into. So.
Just thinking, I think my mom turned 62 this year. Yeah. There you go, Mom. If you're listening, there's options for you.
That's nice.
I know, whatever. I had to math it out in my head on when she turned that. Well, thank you so much for coming on today. And we're going to throw your contact up on the screen so that if anybody has any questions, they know how to reach you. Any of the realtors or buyers that are listening, if they have questions, they can call, text, email, or check out your website. So, you're only, because of my age. I forgot. Sorry, Mom, 2 years. I was just making sure you were listening.
Good try.
She'll be texting me afterwards. I can't believe you said I was older. Anyways, all right. So that concludes our podcast. We miss you, Kristen. I can't wait to have you back. I think you're back next week, I hope. So, but thank you so much for coming on and being my special guest. Yep. So if you have any properties that you need professionally managed, we are here for you to be your leasing agent, accountant, repairman, inspector, overall landlord. You can reach K&R Property Management at 352-213-6410. Oh, Eric,
thanks,
that is a great testimonial from somebody in the industry. Yep. So love it. Congratulations. And if you, I have to do all these. Oh, Kristen, hurry back. If you are part of another brokerage or thinking about getting your license and you have questions or thinking about reaching out, you can do so anonymously at join@buysellrebell.com and find out what all Rabell Realty Group has to offer you. You can also reach us at 352-559-8820. And if you can't get enough of Kristen and Rebecca and all of the Rabell Realty Group gang, you can catch us on Facebook, Instagram, TikTok, YouTube, LinkedIn, and Google My Business. Don't forget to like and subscribe. Did you know Rabell Realty Group has a blog? Yes, we do. We put all kinds of helpful information and tips, and typically a regroup of the podcast. So if you missed it, you can check us out on our website. Sorry, I must need a coffee. And we'd like to thank the Fiesta Media for putting on this podcast and all of our other podcasts. If you are thinking about having your own podcast, you can reach them at 352-327-5089. And don't forget to tune in next Monday for the Rabell Realty Group podcast. We'll see you then. Bye. I'll do 2 waves, one for Kristen, one for me.